Panel, thank you so much for being here. And as I said, I'm sure our audience knows your brands quite well, but they may not be as familiar with the work that you do. So I might just ask you guys to give a quick introduction and share a bit with the audience about your specific role and what you do. Darren, I'll come over to you first.
Well, thanks very much, Erica. And first of all, I want to thank you and BC Tech for having me and for organizing this great event. And I also want to thank all of the entrepreneurs, founders, and operators who've taken the time out of your busy schedules to join us today. My name is Darren Louie. As Erica shared, I work for Amazon Web Services, where I'm one of the leaders of our startups team here in Canada. And so essentially what my team and I do is we work with startups and founders all across the country, really at all stages. So from pre-seed all the way through to exit. And we exist to help startups use the resources of AWS to grow their businesses. So that means a couple of things. That means, for example, giving startups technical advice about how to use our now 200 plus cloud computing services to build whatever it is that you all are trying to build. I think most folks are more familiar with that side of what we do, but it also means that we connect startups with a number of non-technical resources. So that includes things like getting access to our co-marketing and co-selling programs, which we'll talk about in some more detail, getting access to funding, whether that means direct AWS cloud credits or helping you raise investment from third-party investors like the venture capital community. My team includes a lot of former founders and folks who come from the startup world. So we try to think pretty holistically about what startups need and how we can apply the resources of AWS to help you. Personally, I've been at Amazon for 4 years, but I've worked in tech for 16. Like Erica said, I used to work for a little startup called Google and IBM before that, based in Toronto, but I work all over the country and try to be in BC as often as I can.
That's awesome. Thanks so much, Darren. Next, I'd love to hear more about your role, Kange, at SAP.
Thank you. And at the start of the call, you said my name perfectly. So we're off to a great start. Thank you for that. So thank you everyone for having me. My name is Kange Kanene, as Erica said, and I do work at SAP leading the Startup Accelerator for the Americas. A little bit of a unique situation because I'm actually outgoing. The group is sunsetting. However, the group is about connecting startups to SAP so that they can go to market together and do a revenue share. But I have spent my whole career in enterprise software and have done a multiple different approaches to third-party partnering from merger and acquisitions, startups, and mid-scale. So I know we'll have a good conversation today.
That's great. Thank you so much. And Matthew, great to have you here. Tell us a little bit more about your role.
Oh, thanks so much, Erica. Great to be here. And I think I recognize a few of the names from my accelerator days in terms of the participants. So hi to a few folks. I can certainly attest that AWS has been an incredible partner to a number of startups in the Canadian ecosystem. When I was with 111, which is an accelerator out of Toronto, the AWS cloud folks were terrific in terms of activations with a number of our portfolio companies. So I've certainly seen firsthand the other side of this discussion in terms of how emerging startups in Canada can access some of the brands here on this call. But in my current role, I'm obviously with TELUS. TELUS, between TELUS Ventures and the TELUS Pollinator Fund, which are our venture capital entities, we are the largest corporate venture capital firm in Canada with 800 million in AUM and about 85 portfolio companies and counting across Canada and internationally. And what we do is we provide strategic partnership in addition to the check that we write to get access to the cap table. What we're also trying to do is give our portfolio companies access to exactly some of the things that we pulled about at the start of this call. So excited to delve a little bit more into that. My role is as a partner on the team who heads up platform services. to try to figure out where we can add value strategically across TELUS every time we make an investment.
That's great, and I love the connection between the three of your companies.
Yeah.
So yeah, in the poll, as we noted earlier, I took the notes here, and brand association was at the top of the list, 57%. Certainly being associated with any three of your brands is a good mark of distinction for a startup. But maybe I'll come to each of you, and maybe you can highlight, some of the key benefits that you see startups gaining from partnering with enterprise. And I'll come over to you first, Kage, if you could share your thoughts.
Yeah, absolutely. I actually was very surprised by the results of the survey. We'll get into this a lot more, but in particular, when startups are partnering with large organizations like SAP, it is a fantastic investment financially, with human resources and time. And so if the only benefit is marketing, I would question if that's the right partnership. So I just wanted to mention that. But I think the main benefit for startups to partner is to figure out how to scale in a more an accelerated way, and help to best use the resources that they have.
That's great. And I think getting past that kind of brand awe and to like, well, how are you going to put that into action is really important.
Yes.
Yeah, good. Darren, your thoughts. Were you surprised as well? And what do you think are some of the really key benefits?
I'm thrilled that we have so many folks on the line who are thinking about brand association, because I have a story from about 6 months ago that I'm still excited about that I want to share on this topic. So obviously we have lots of tech entrepreneurs in the audience today, and all of you in your own ways are building incredible products and experiences for your customers. And so from a brand association or brand awareness perspective, one of the things that we do at AWS is we use the marketing resources that we have to help the startups like yourselves who work with us tell your stories. And we do that in a number of different ways. And the maybe ultimate example, which I'm excited to share and that I'm still excited about, is Precision AI, which maybe some of you are familiar with. Precision AI is a 5-year-old agriculture technology startup out of Saskatchewan. And they essentially use AI to help farmers better manage their crops. And last year, my team and I worked with Precision AI to help put them up on stage at reInvent. So for those of you who aren't familiar, reInvent is our annual flagship conference, AWS conference. It happens in Las Vegas, attracts tens of thousands of attendees, even more watching online. We hosted in Las Vegas, like I said, and so it was really exciting for me to help this Canadian startup out of the prairies get up on stage during our keynote next to our CTO in front of tens of thousands of viewers and folks watching online to tell their story. So that was super exciting for me. But outside of reInvent, we have lots of other events that we run ourselves or that we sponsor. A lot of those are sort of industry specific, and we will frequently look to those events as opportunities to help the startups that we work with get up on stage and tell their story. And we do lots of digital co-marketing too. So for example, we can maybe drop some links to this in the chat, but we have the AWS Startups blog and the AWS Startups Showcase, which are a couple of digital resources that we have. And all of these resources are geared around helping the startups that build with AWS showcase what they're doing and tell your own stories.
That's fantastic. I love that story. I'm a Saskatchewan girl, so that's awesome to hear. And really, it's about kind of sharing that platform that you have with others. And at BC Tech, we have an awards program. Thankful for partnership from all of your organizations across the years for that awards program. And we just had our pitch night for our startups last week. And really, that was such a great opportunity for them to go on stage and get that exposure alongside some amazing companies. So, Matthew, I'm curious to hear from you your thoughts on, the answer to the poll, but also just generally in terms of the key benefits from partnering. And certainly you said they access the resources of TELUS, which is a huge benefit.
Sure. Yeah. Look, I too was surprised by how lopsided the poll results were. But at the same time, I think we certainly know that a strong marketing presence is top of funnel for sales, right? And so I would connect that to several other pieces of the business for a growing startup that are so important. And one of the ways that we've tried really hard to think about how we add value to a growing startup when we end up on their cap table is to think about what can we do leveraging the corporate resources of TELUS that nobody else on the cap table can do. And typically we're going to be the only corporate VC on the cap table because we're investing where there is a strategic fit. And quite typically the value add function, the post-check engagement with many traditional VCs, is typically going to be constrained by the resources that they have at their disposal, which is just a very diplomatic way of saying they don't have the same resources that a large operating business like TELUS has. So I'll give you an example. So at TELUS, we have, I think, quite obviously, some very global procurement needs, and so we've got a couple of portfolio companies that do deal in the chip space for their hardware needs. And one of them came to us and said, hey, we've got a chip backlog issue that we're facing, and it's preventing us from scaling. It's a major roadblock for our organization in terms of sales, in terms of growth. And we were able to step in and say, hey, let's have a conversation and plug you in with the procurement leaders at TELUS. And from that example, we were able to start to think through, is there a procurement as a service offering that we, TELUS, uniquely can offer to our portfolio companies that, again, a more traditional VC just wouldn't be able to offer because they don't have an operating business unit that has the types of procurement relationships globally that we have. So that's the kind of thinking that we're doing in terms of the uniqueness of a value add and leveraging what we do well. The other thing that TELUS does well, and I'll speak to the poll results, is obviously there's a huge consumer marketing component to our operating businesses. And so that's another area where we're able to, I think, lean in a way that we can go and draw across resources that exist within the business and talk to different TELUS practitioners who have that skill set and expertise and plug them in with portfolio companies for opportunities that are development opportunities for TELUS practitioners on the one side and great value add for the portfolio company on the other side. So at a very high level, we're looking to make those matches and then start to productize them, right? And start to create an opportunity where on an ongoing basis, we can collect little mini projects like that and try to formalize them systematically so that our portfolio companies can benefit from the resources, both in terms of personnel and otherwise that TELUS has.
That's excellent. Yeah, I love that, building that unique value add. No, I know many folks online, I'm sure they were convinced before they came, but they're more convinced now. But they might struggle in terms of how to get started. So I might ask the three of you, are there any kind of first steps or resources you could point the audience to if they're looking to explore partnership opportunities, certainly with your own organizations or generally? And Matthew, maybe I'll just come back to you again, if you don't mind.
Sure, absolutely. Look, I think top of the funnel for us, anytime we're considering an investment, our first question is there mutual value here? We are a strategic investor in the sense that we want to make sure that if we're writing a check into your company, that we can do something to add value beyond just the money. And so that's why we have commercial deals with almost 50% or better of our portfolio companies, with the intent for that to be 100% over time. And that commercial arrangement can take a number of different forms, but the point is, we're very much trying hard to make sure that there is a strategic relationship beyond just the check that is of the commercial nature for our portfolio companies. And so I think the onus is on potential investees to really dig in and do the homework on, TELUS is a very multidisciplinary company. We're into healthcare, we're into agriculture, we're into obviously traditional telecommunications. And it's really to make the approach and help us understand, because we're trying to filter through so many companies as well, help us understand where the strategic fit could be on a future forward basis, help us understand the plan and the growth trajectory and how there might be synergies, right? I think that's always got to be a two-way conversation. And so all that is to say, in summary, the generic approach is never going to work. When you're looking for an investor that's truly strategic, you've got to be able to tell them the story and show them where the fit is.
That's great. And maybe I'll ask my team to drop the links to the Ventures website as well as the Pollinator website so people can take a look and do a bit more research there as well. Kange, I'll come over to you, and I'm curious in terms of, you've had so much experience over your career. Do you have any kind of like resources or links or thoughts for the audience on where they could get started?
Yeah, sure. No links, but this is usually the way that I counsel startups when it comes to partnerships. I think sometimes the partnerships seem glamorous and a lot of startups feel like that's a benchmark they need to get to. But it's good to take a step back and figure out, okay, why do you think right now is a good time to have partnerships? So one test is to say, is there something that you can't do right now based on your current human resources or the money that you have in the bank, right? There's a lot of startups in particular, for example, maybe that are underrepresented, having a hard time fundraising, or will go to partnerships to get revenue. That's a good time to do it, right? So that's one thing. Second, is your customer base asking for the partnership? So in the case of SAP has basically every large company as a customer. And so sometimes customers will say, you have a great solution, but if it's not integrated to SAP because we've already invested in it, we're not going to do it. And so that's a good time to think about, okay, we're going to be more successful at scaling if we partner based on customer demand. And that's SAP, but it could also be other companies. So I want to be clear there that this could apply to other companies. And then finally, and just being honest, a lot of big corporations, SAP in general, take a long time to move. And so do you have time to wait like 12 months or so for a partnership to materialize? The exclusive might be marketing, like Darren said, we put startups on stage as well. It doesn't take us long, but if it's any material partnership that involves revenue, it's not going to happen quickly. And so as a founder, you have to think about, can I wait that long? Otherwise, if not, there's something else I need to do to get the scaling. And then after that, if the answer to that question is yes, it makes sense to partner, then you should talk about, okay, what type of company is good to partner with. So one thing it's so interesting that I feel like a lot of times startups don't think about is, do you have a compatible business model? Right. So one example is one time we had a startup that they get business from, it's a payments company. They get revenue based on transactions. SAP only bills by SaaS, right? And so just fundamentally, it didn't work, right? And so that's something that you could flag early on and save yourself a lot of time. Is there someone in the company that is going to actually sponsor you as a partner? Because these companies are very, very big. And if you don't have someone that can kind of guide you through the process, then you can get lost in it and it can also waste some time. You should also think about, has a company done this before with a company of your size? We're partnered when SAP and Amazon partner, it's a very different process than when SAP and startup partners. And so if they've never done it before, that can be scary as well. And then there's one more point I was going to make, but I can't remember what it is. So if I think about it, I will I will come back to it.
That was a good laundry list. So amazing advice in terms
Oh,
of.
sorry, I remembered. And that's a good job. I just want to lose it. And so the last thing I would say is, a lot of times, again, I'm coming from a big company perspective. You might have like a small pilot type partnership that is good for the moment, but not realistic if as a startup you scale big. So it's best if you can find a company where there's a path to a more strategic partnership over time based on incontrovertible metrics. Like if you bring up this much revenue, then SAP or whatever company will put in this much more in you for marketing or whatever. That way you know that it's going to be mutual beneficial over time, because sometimes what can happen is big corporation can suck a startup dry again from resources. And then that's also not as good. And then finally, just asking some initial questions about, would this be a potential exit opportunity? Not a requirement, but she should feel like, again, when it comes to strategy, that this is something that could be realistic in the future. That's it. Thank you.
That's excellent. No, excellent words of advice. And yeah, in terms of thinking about that timeline and whether that's going to take a long time, do you have the bandwidth, and what's the payoff going to be, and that at the end of the road. Um, Darren, I'll come over to you. And the question was around resources and where start or founders can start.
Yeah, and I think Kange made a really good point with respect to how long it can take to establish a partnership. And I would build on that by taking a little bit of a step back and suggesting that if we polled the audience and asked, what does partnership mean to you and your business, we get a lot of different answers. And obviously, partnership can mean a lot of different things and can be built in a lot of different ways. So I think in terms of resources, it depends where your startup is and what you need. And so one resource that I'll share is startups.aws. So startups.aws is our main central hub that contains information about all of the resources that we offer to startups. So if you're not really sure what a partnership could even look like, it's a place to do a lot of research, to collect a lot of information. You'll find, for example, there, AWS, we run a number of our own first-party accelerators. So maybe to your startup, a partnership means we want to work together in as part of an accelerator cohort, and that's the sort of support we want from a company like AWS. And there are a number of different resources available to startups that are part of those accelerator programs. And so we've got healthcare specific accelerator, we've got a fintech specific accelerator, and a number of other ones. So through that portal, you can sort of browse, okay, here are the accelerator opportunities at AWS. You can collect information about our credit packages that we offer to startups, events that we run that are relevant to startups. So again, going back to the Precision AI example, and having the opportunity to get up on stage with AWS at an event, you can start to get a sense for what are some of the events that are coming down the pipeline, and just start thinking about what could a partnership with AWS look like? What are some of the resources and programs that AWS has available for startups? So that's kind of the first one, startups.aws. If you're earlier stage, just starting to explore, it's a great resource. We update it frequently, so you can bookmark that one. The other one is AWS does have a more formal partnership program that some folks may be familiar with, and so it's called the AWS Partner Network, or APN. So this is, I talked a little bit earlier about the sort of non-technical resources that my team and I make available to the startups that we work with. So these are sort of the co-marketing programs, the co-selling programs, where you can work together with the AWS sales force, for example, to co-sell to a mutual customer, or get access to market development funds if you want to help, you want AWS to help cover the cost of running a webinar or running some other lead generation event. All of that flows through the AWS Partner Network. So that's the other portal website. We can share the link in the chat that I would suggest. I do want to call out that there is a vetting process for APN. You don't just sign up and then you're a AWS partner the next day. And most of that is AWS reviewing your technical architecture. So what have you actually built on AWS? So there is a little bit of a lift there, but the good thing about that process, that vetting process that we've found, is that if you're a startup and you're trying to sell, for example, to an enterprise prospect, to an enterprise customer, it can be a little bit challenging sometimes if that enterprise says, well, your product sounds great, but I've never really heard of you. I'm not sure if I really trust you, and I'm not sure if I consider you to be secure, and so on. Having that AWS partner status can give you a modicum of credibility that your enterprise customer can then look at and say, okay, well, AWS has at least to some degree vetted this startup, this business, and that can help inspire confidence in your customer, your prospect. It can potentially help shorten your sales cycle and ultimately help you close more business. So there is a little bit of that initial lift required to onboard, but I think there's value if you stick with it.
Can I just jump in and say one quick thing? Sorry to mess up the flow, Erica. But I do know as a founder, it can be very overwhelming with so much information. In the US alone, there are 2,000 accelerators. There's less in Europe, there's only 500. But so even with all these links that I think Amazon does such an amazing job with more startups, it can be overwhelming. So I think if you can just think about, what are the gaps I'm trying to fill? So for example, if you're saying I'm based in the US and my next thing is I really want to expand to France, look at in France in particular, who are the major players that complement what you're doing and focus just on those. Or if you want to get to an adjacent industry, right? That way you know that it's going to be strategic and it's not, again, it's overwhelming to understand which accelerators are better than the other and which timing and so forth. So just something to mention in addition to the great resources that Darren just shared.
That's great. It was a perfect segue to my next question. You've already maybe covered it a bit, but I was going to ask, what are your top tips for founders on how to best position themselves and maximize the opportunity as well? And maybe this will tie into that what we were saying earlier. It's not just about the brand; it's about the customers and the revenue at the end of the day. So maybe I'll just come back to you, Kanye, for any additional thoughts on what are those, additional kind of top. If you had a top 3 tips for founders to take away from our conversation today, what would those be?
Thank you. Matthew said it a little bit at the beginning, but sometimes it's easy to forget that partnerships are supposed to be bidirectionally valuable. And as a startup, I've had so many startups call me and say, hey, we're ready to partner with SAP because we're ready to scale. And my thought is, well, why would SAP want to help you scale? Like, what are we getting out of this, And so explaining and doing your homework to see this is where a big company, you've done the research to see this is where I think there's gaps for this large company, even though that seems strange because they have so many more resources that we can fill in. Again, listening to your customers. Customers might actually help you articulate that gap because they're feeling it as customers of both of you. But if you can't go into a situation and understand what's in it for the target partner, then it's not going to be a good conversation, and it's a non-starter.
That's great advice. Thank you. Darren, your thoughts on tips in terms of best positioning for partnerships and then squeezing the juice out of that opportunity?
Yeah, well, first of all, just +1 to what Kange said. Totally agree. To have that, it has to be mutually beneficial, and so I can't agree more with what you just shared, Kange. I think so. For me, I'll share sort of my big picture suggestion and something a little bit more tactical and specific when it comes to a tip for partnering with AWS. So kind of high level, I would say one piece of advice is when you're ready for a partnership. Again, Kange, you're right. There's so much information out there, and even within the context of, let's say, the AWS partner network that I described earlier, there are a ton of resources that are available through that program, and it is frankly, you get out of it what you put into it. And so my advice would be, if you've decided for your startup that you want to pursue becoming an official AWS partner and join the AWS partner network, I've seen the best results when startups either hire or assign a specific partnerships person to really drive that partnership agenda and partnership process. There's too many resources available, and if it's being handled off the side of someone's desk, it becomes difficult to navigate. So having a specific partnerships lead when your startup is ready to have that sort of a role can help you make the most, certainly, of the APN program and other partnership opportunities. A little bit more specifically, I would say, and this might sound sort of in the weeds, but for the right sort of startup, I think this is helpful advice. And so when it comes to partnering with AWS, consider listing your tech product on the AWS marketplace. So for those who aren't familiar, AWS Marketplace is, as it sounds, it's a marketplace that you can sort of think of like an online shop for AWS customers who want to buy third-party software through the same procurement flow that they already use to buy their AWS services. So let's say I'm a bank and I already buy AWS services today. I already transact with AWS, and now your startup, you've convinced me to buy your product. I like your product, but I might get hung up at the procurement stage because I'm an enterprise. I have a formal procurement process. I have to onboard you as a new vendor. We have to sign paperwork. I may have dozens or even hundreds of other vendors already. Might not want to onboard another one. I might not even have the bandwidth to do that. And you as a startup have limited runway. But I, as an enterprise, already have a procurement flow and mechanism with AWS. And so if your startup is listed on the AWS marketplace, I, as an enterprise business, can sort of piggyback off of that procurement flow and agreement that exists, and potentially accelerate the procurement process for you. So it's not a fit for every single business, but when it comes to partnering with AWS, specifically from sort of a co-sell perspective, from a procurement perspective, AWS Marketplace can be really helpful.
That's great. I appreciate the tactical tip of what they can go do today. Matthew, in your case, I think the earlier comments around that bi-directional value is really important. And so I might ask you just to look at this question a bit differently, and maybe you could tell us a bit more about the profile of companies that you look to invest in, so that folks maybe on the call can think about, does that fit what we're doing? Because it's relatively kind of specific for your group.
Sure, and maybe I can answer it by riffing off of something that Darren just said, because I think it's really relevant to how startups should consider partnering with larger corporations. So there's a theory called the onion theory of risk for startups. Very well known in the investor world around layers of risk associated with new business ventures. And I think most of the founders on here will have heard about the onion theory of risk, and it's essentially around peeling away risks one layer at a time, from core product risk as the innermost layer, through market risk, execution risk, so on and so forth. There's typically 6 or 7 layers. And that's supposed to be the lens through which an investor looks at a startup. I actually think, riffing on what Darren just said around, getting a new vendor on board, that I'd call that an execution risk. I think there's a really important reversal of the onion theory of risk here, where every startup needs to consider the onion theory of risk when they're considering partnering with a big corporate. Because as Kange said, you need to look at that big corporate as your customer, and vice versa, right? It's a bi-directional relationship, and you have to consider what their interests are as well. And so if you as a startup have gotten past the core product risk, and once that risk is addressed, you've gotten past the market risk, meaning making sure there's a real demand for the product, validating the customer needs, confirming customers are willing to pay for the product at a sustainable price point. Now you're getting to the point where you're at layer 3 in the onion theory of risk, right? Layer 3 from the innermost layer, which is execution risk. Can you actually deliver the product to the market at scale? And that is going to be singularly the most important risk when dealing with a large corporate, right? Because it encompasses your operational capabilities. It encompasses the ability to manage supply chain. It encompasses your ability to hire the right talent. It encompasses your ability to execute a go-to-market strategy effectively. And that's the level of scale that any startup has to reach in order to be a viable partner for a large corporate. And so you've got to figure out, is this the right partner for me at the stage of growth that I'm at? So it's about reversing that theory of risk that every investor is going to look at your startup through, and trying to understand, where are you on your journey, and is this the right partner for me at this stage of my journey?
That's great. Thank you, Matthew. And I think we've kind of touched on maybe my next question a bit, but I was interested in hearing if you guys had any kind of words of caution. I don't want to bring the mood down here, but if you've seen any kind of common pitfalls or mistakes that folks should maybe look to avoid. Maybe I'll come around, you guys. If you have an answer for this, please. Sorry, Matthew.
Yeah. I'd love to jump in on that question, Erica. Sorry to butt the line here. One of the things that I saw a number of times when I was running an accelerator is there are a lot of startups that seem to believe they need permission to build. And I'm here to tell you, you don't. You don't need to chase logos. Some accelerators are great, some accelerators are less great, but again, there's a reason and a season and a time for everything. And it's about what fits your needs at a given moment. It's not about chasing the logo of the accelerator. It's not about chasing the logo of a particular corporate partner. Uh, Everything needs to be about finding your customers and meeting your customers where they are and growing sustainably and scalably. Everything else is noise. So you got to pick the right partners that are going to help you with that North Star of being customer focused. You got to join an accelerator if you're going to join one at the right time, if they're going to provide you the right supports at that moment on your journey of de-risking in order to, again, help you towards your North Star of being customer focused. But nobody needs to give you permission to build, right? Collecting these logos is not a prerequisite. It should be a helping hand on the way to doing what you're actually trying to do, which is serving customers. And too often, especially with, I think, first-time founders, there is a bit of a logo-itis that sets in where they think, if I hit this milestone or get into this accelerator, the pathway will magically become clear to me, or this support network or this partner will tell me. No one's going to tell you, except your customers.
Yeah, that's a good one. What I would say, and this is so important, is especially in the context of partnerships, do not get into an exclusive partnership. It is never the right thing to do. If you are a star in the market as a startup, then you need to make sure you have as much market opportunity as possible. Even as big, SAP and Oracle basically hate each other, even we partner with each other. We do. Every competitor we have, we partner with. So if a company is telling you that you can only partner with us, that's not in your best interest, and it's not going to be a good relationship.
Yeah, and maybe I'll just build off of what both Matthew and Kange said, because what Matthew said about continuing to focus on building sustainably and scalably. And I think that ties to Kange, your point about not tying yourself into an exclusive relationship. We're talking here about partnering with enterprises, and one of the challenges associated with partnering with an enterprise or selling to an enterprise or chasing that logo, to Matthew's point, is sometimes an enterprise customer or partner can be extremely demanding in terms of creating custom integrations or custom features that they specifically need. And all of a sudden, your very limited resources at a startup start becoming a development shop for this one enterprise partner. And your business can become very dependent on that one customer for whom you have tied up most of your resources, and it becomes difficult to scale a tech product that has become so heavily customized for one specific enterprise partner or customer. So obviously we're talking here about best practices for partnering with enterprises, and so I'm not trying to suggest that it's not worthwhile to partner with or sell to enterprises, but you definitely want to be mindful of some of those sorts of pitfalls.
And that's what I was referencing when I was saying the 12 months, right? Is it just can be very time-sucking.
I appreciate that. I think, yeah, what I was hearing is like, as a founder, really have that relentless focus on your business, partner when it makes sense for you. And it's awesome to hear from all three of you about the amazing opportunities that are available to partner with your organizations to help startups on their way to scaling up. So we've got a quiet chat today, so it leaves me with the final word, which is I'll take it. And just wanted to come back to the three of you as we wrap up today's session. BC Tech has an amazing group of startups. For any startups on the line who aren't members today, it is completely free. So we'll drop the link in the chat. You gain access to amazing organizations like the three on the call who are BC Tech members and supporters. You also get access to peer-to-peer groups where you can talk about partnerships other people have had, share strategies, swap stories. So please make sure to sign up. But I meet with our startups often. They're very ambitious. And so I'd love to hear just some final words of encouragement or advice from the three of you for any startups on the line. And I'll come to you first on this one, Matthew.
Sure. Yeah. Look, if you can build a startup in today's macroeconomic environment, you're already battle tested. So keep going.
All right, Kanye, over to you.
I was actually literally going to say keep going as well, but okay, now I'm on the spot to say something different. But I think being resilient is really important for a startup. So maybe I'll just underscore that, is that you are the right person for the job, and just make sure that you keep that in mind.
That's awesome. Darren, your final words?
Yeah, well, lots of the startup founders that I've met and that I've worked with, they come from industry, some come from academia, they have some specific and often deep expertise in some specific field, but and want to build a business around it, but don't necessarily have the uh, the business background or the operational acumen to know what it takes to actually run a business. So my piece of advice would be um, read, learn. There are a lot of great books. A few of my favorites are The Hard Thing About Hard Things by Ben Horowitz. 0 to 1 by Peter Thiel is another really good one that can give you a perspective on what it's like to actually build a startup from sort of the business and the operator perspective. There you go. I see Matthew. Matthew's helping me make my point. You don't have to buy those books on Amazon, by the way, but I appreciate if you do.
I keep a copy of 0 to 1 on my desk, Darren.
Yeah,
There you go.
okay, I agree. I'll say one more tip, since I kind of basically copied Matthew's. It's very important to take your first few hires seriously. Though those are, first of all, the hardest ones to part from, but also the most significant, that hopefully round out the skills that you have as founders or a founder team. So I know there's temptation to just say, I need help, I want to hire someone who's excited, but take the extra time to make sure you do have a real CFO, a real CMO, all those roles. It'll pay off in the future.
That's excellent. Well, thank you, all three of you, Kange, Matthew, Darren. It's been an absolute pleasure getting to know you today, and I really appreciate you taking the time to connect with our members and share your insights.